Hello, welcome back to Robinhood Stock Market Watchlist weekly video. My name's Carlos, and in this video, this is for February, the week of February 20th through the 24th, 2023. We're going to go over pretty much everything that's scheduled for this week, and that way we kind of analyze some volatility. Looking ahead, we always want to look at the schedule that has the most volatility. And in this case, a majority of that's going to be economic reports and sometimes president speeches, as well as White House press conferences, as well as earnings. So it is a pretty busy week, even though today, being Monday the 20th, is a holiday. We have, that means there's 4 days we're just going to kind of cram 1 week's worth of events in. So be prepared for lots of volatility as we move forward. And so looking ahead with this week's economic reports first. So today being Monday is a holiday, so nothing there. Tuesday, we have the existing home sales. That means like pre-owned homes for sale. Now, if you're new to economic reports, eventually you'll start kind of getting it down and remembering some of these previous reports. And it wasn't that long ago where these existing home sales were right around 5-6 million sales per month. So we can see as interest rates go up that the home sales have been going down. And so because people bought their homes when and refinanced when interest rates were down, so there's the home sales market, as you've noticed, there's more for sale signs up around the neighborhoods. And so but one way to kind of tell some more information from this is we need to look at the time of the release. And so we have the date there, so we know that this report is going to be released on Tuesday, February 21st, but at 10 a.m. Eastern time when we're looking at this on the website. If we're looking at this on the mobile app, then it's going to automatically adjust the time with your time zone. So it's important that is this going to be released before or after the stock market opens? So in this case, this economic report is scheduled to be released 30 minutes after the stock market opens. And typically, the first hour and the last hour of every day is the most volatile times. It's the most active times. There's the most trading throughout that time period. And so this is 30 minutes after the stock market opens. This is like pouring fuel on the fire. This is just going to add more volatility, more momentum to the volatility. And so, however, one way to, and if you're not sure what these economic reports are, be sure to click on them. A new tab or page will appear, and it'll tell you within a very small paragraph here of what it is and how it will affect the stock market. And so, but after a while, they're pretty repetitive. We do have weekly reports, monthly reports, quarterly reports, and yearly reports. But the more rare that they are, the more volatile that it will have for that particular day. And so this is a monthly report. So this is a good report that we only have it once a month. And so this is going to provide a very good amount of volatility. But how we can tell what kind of volatility, is it going to be bearish or is it going to be bullish? But it also depends on what the economy wants, what it's looking for, because sometimes good news can be bad news, or sometimes bad news can be good news. But ultimately, we want to focus on the majority. And so, however, we can look at this though. So the previous report, which would have been for the month of December, was at 4.02 million existing home sales. So but this is forecast to be higher than the previous. So, So this is, in a way, this is letting us know that this is going to be, well, typically in a normal world, this should be bullish, but if we're looking at it as good news can be bad news, because the government's trying to slow down the economy to lower the inflation that they originally increased. And so by looking at the forecast, I feel that they're just setting the bar high. I think that the actual report will come back lower, but if it does come back high, I think that's going to continue to provide more bearish characteristics, because the previous week's economic report showed that the inflation slowed down. It didn't really go up. It didn't really go down, even though the government's trying to lower it. And it seems like the government's not doing enough to, which is actually kind of a bad thing, because in order to do more, they have to increase interest rates and be more aggressive doing it, like 0.25% at a time now. I mean, it just, they need more or something. I mean, it's weird, and so if home sales goes up, that's just going to continue to let the world know that that the government just isn't doing enough, and that they are going to do more. And so when the government has their little Fed meetings here on Wednesday, they're going to probably say, oh, we need to do more interest rates, and be more aggressive at them, and we need to do a 0.5% at a time instead of 0.25%. We're just not doing enough. We got more work to do, blah blah blah. And so it's just going to be very interesting to see what's kind of going on. And right now the U.S. futures, I believe are in the red right now. So it may already kind of getting ready to price in that kind of. Let's take a look at the U.S. futures really quick and see exactly kind of where we're at here. Okay, so it looks like we're still kind of hovering around 0%, so it's just kind of waiting, but we'll have to give it more time. But we'll have to kind of see what it does as we move into pre-market, because it's the market is usually kind of prices it in a little bit prematurely, and so we'll have to see. I would say though, the good news is bad news. Normally, this is good for the economy. If home sales is up, that means people are buying. They're paying sales tax. This is good for the economy. But again, if we're looking and waiting for, waiting for whatever the government's doing to work, and if it's not, then we know that there's just more bumpy roads up ahead, and so I to be determined, but I'm feeling a little more bearish with Tuesday and Wednesday, because and then we can see here that the Fed meeting is scheduled to be at 2 p.m. Eastern time, and so this is going to provide a massive amount of volatility during power hour on Tuesday, and so just be prepared for that, as well as Thursday morning we have the GDP quarterly report. As I mentioned earlier, the more rare these reports are, the more volatile that it's going to be. And the GDP helps provide us economic growth, whether the economy is doing well or are we in a recession, kind of thing. And so it's going to provide some pretty interesting mixed signals, because the previous report was at 2.9%, which was usually good, but the forecast is looking to be the same. So as I had mentioned before, it kind of continues on where whatever our government's doing, they're not doing it enough to help out the situation. And so that's just and most likely, like I said, on Wednesday, the government's just going to say, oh, we need to increase more interest rates and be more aggressive while doing them. And so, but the GDP report is scheduled to be released 1 hour before the stock market opens, as well as the unemployment report, which they call the initial jobless claims, has been extremely low. In fact, it's been much lower than before the when they shut down the economy. Typically we were always right around 250 to 300,000 people filing for unemployment every week. Well, it's much lower than that now, and we have more people in our country due to the invasion of Russia. We have thousands of refugees in our country from Ukraine, as well as maybe some other countries, as well as our borders that are open down south. And so there's still we still have a population shortage, and that's why we're seeing a lot of these weird things. Why is the government doing these things? Whether it's the fighting for regarding the abortion stuff or open borders. They're trying to make it so that way we can try to increase our population, not decrease it. And so, but it's there's other ways to fix things. And so, but anyways, crude oils inventories, which is also scheduled to be released, looks like about an hour and a half after the stock market opens. So just kind of continuing a little bit more of the momentum. However, now, trying to decipher whether these are going to provide bullish or bearish characteristics, it looks like to me that the if it's hard to, because the GDP, it looks like it's going to provide mixed signals, as well as Thursday and Tuesday are quantitative tightening days. So these are also days where the government sells stocks that they bought when they shut down the economy back during the second quarter of 2020. That was called quantitative easing. So they shut down the economy, stocks plunged, they bought during the dip, and now they're selling high. They've been selling high for several months, and we have several months more to go. That way they can secure their financial gains. But soon it'll start to cool, and so that way it won't be as aggressive, and that way the investors in Wall Street, as well as everyone, can begin to see the light at the end of the tunnel, and start pumping the market. But recently, they've been a little prematurely pumping the market, but in the last week there's just been a little bit of some turmoil, and so the stock market's been fumbling a little bit. And so but it's important to try to know exactly when these reports are going to come out, rather than focusing on the news and alerts, because it's important to know what's going to happen before it happens, and to stay focused and kind of analyzing these forecasts as well. And so if the unemployment report goes up more than the 194,000 than last week, that's typically a bad thing. But however, in this case, again, bad news can be good news. If we're looking for the government to try to make the economy worse, which will help the market to become better, this could be a bullish thing. But also the crude oil inventories, last week, this was huge. We have not seen the crude oil inventory levels at over 16 million barrels in a long time. And so, but that means there's a high supply and a low demand. And so we should see, and that's why we're starting to see the barrel of oil kind of plunge down quite a bit. The gas prices should start to kind of start falling down a little bit. But when we see these big swings like this, we see a big bounce. And so the previous report, this is typically bearish because when people are not driving or flying, they're not spending gas, they're not spending money on that stuff. That means they're not spending money on other things. That doesn't help the economy. And so, but when we see big swings like this, usually we see the next week, there's a big bounce, and so we do usually see people do a lot of driving after that. And so it should be much lower than the previous. Might not be as low as the forecast, but this report should provide us some bullish characteristics. So but this is going to be a little bit, like I said, about an hour and a half after the stock market opens. So if Thursday does open in the red, it could begin to close in the green. And so then we have Friday. We have the core PCE price index for the month over month of January is forecast to be a little bit higher than the previous 0.4%, where the previous was 0.3%. And so typically that would be bullish. But again, if we're looking for things to be down, again, good news can be bad news. But then the new home sales, which it's interesting because new home sales has kind of gone up as existing home sales have gone down. Existing home sales have greatly appreciated, and as well as interest rates are crazy high. However, buying a new home may be more practical than it would be to buy an existing home, because you can probably build a brand new one for a lot less money. And so we've seen over time in the last year, new home sales go from like 400 to 500 to now 600,000 new homes. And so again, this should typically be good for the economy, unless good news is bad news. All depends on what Wall Street and investors decide they feel like these particular days. But it just, this is just, sometimes it's hard to because with everything going on, it's just with all the mixed signals, it just depends on what the government's also ultimately going to say on Wednesday, February 22nd. So we can kind of got to make sure that we're just kind of focused in on that. But on top of this, the earnings report is also going to be very volatile as well, and we can kind of dig in there a little bit to determine what stocks are going to provide us with a certain level of volatility. And so under our featured and announcements area, we'll always post a lot of highly valuable information, as well as the schedule for this week. And so big names this week like Walmart and Home Depot on a Tuesday morning before the market opens, and then Coinbase after the market closes, and then a few other ones on Wednesday like Nvidia and Lucid are pretty big ones. Thursday we got Alibaba, Moderna, and Square Block, Carvana. Just some huge names, and we're going to see some big movements on quite a few of these. And so to kind of determine some of that, we do have at least the top 10 earnings analysis for this week, like Lucid, which is scheduled to be released on Wednesday after the stock market closes on February 22nd. The company earnings release does have a 49% expecting an earnings beat, but option traders are pricing in around a 17% price movement in either direction. So be prepared that this one could be a big mover, just in either direction. Then we have the Medtronic, which is confirmed to release their earnings on Tuesday morning before the stock market opens on February 21st. The company's earnings release has a 24% expecting an earnings beat, which is absolutely terrible unless we're betting against it. We can do that utilizing options and a put, because if 24% expecting an earnings beats, that means that 24% call is in our favor, or a put is 76% in our favor. However, option traders are pricing in around a 4% price movement with this one, so it's not going to be a big mover, but at least it is more likely to be in a particular direction. Then we have Moderna. Moderna is scheduled to release their earnings on Thursday. Let me see, before the stock market opens on February 23rd. The company's earning release has a 32% chance, or a 32% expecting an earnings beat, while option traders are pricing in around an 8% price movement in either direction. Block, which is formerly known as Square, they are scheduled to release their earnings on Thursday, February 23rd, after the stock market closes. The company's earning release has a 64% expecting an earnings beat. Option traders are pricing in around an 11% price movement in either direction. Then we have the PANW, Palo Alto Networks, and they're scheduled to release their earnings on Tuesday, February 21st, after the stock market closes. The company's earning release has a 78% expecting an earnings beat, while option traders are pricing in around a 7 to an 8% price movement in either direction. Coinbase, very, very well-known company. There's going to be a lot of news focusing on these ones, guys, so make sure these are on our watch list. Coinbase is scheduled to release their earnings report on Tuesday, February 21st, after the stock market closes. The company's earning release has a 31% expecting an earnings beat. Option traders are pricing in a massive amount of volatility with Coinbase. Over 19% is what a majority of option traders are predicting. And so this may be a good one to even straddle, even though we always look at earnings as a lottery play, where we always invest light because it is a high reward but a high risk situation or a strategy. And so, but with this kind of volatility, and if it's planning on going in either direction, we can really benefit from straddling. And so, but if it's more likely to go in one direction, again, we always want to go lightly, whatever that it is. And just in case if things don't work out, that way we're not going to suffer from what's called implied volatility crush, or IV crush. That can greatly devalue both sides of your calls and puts, because things just didn't work out. Next one is the Home Depot. Home Depot is scheduled to releasing their financial earnings on Tuesday morning before the stock market opens on February 21st. The company's earning release has a 56% expecting an earnings beat. Option traders are pricing in around a 4.6% price movement in either direction. Alibaba is scheduled to release their earnings on Thursday morning before the stock market opens on February 23rd. The company's earning release has a 62% expecting an earnings beat, while option traders are pricing in a 6.8% price movement in either direction. Walmart, that's going to be a big retail stock for this week. Walmart is scheduled to release their earnings on Tuesday morning before the stock market opens on February 21st. The company's earnings release has a 69% expecting an earnings beat, which is pretty good. Option traders are pricing in around a 4.5% price movement in either direction. NVIDIA, this is going to make a lot of semiconductor stocks very volatile, because with what affects one can kind of affect the other. So NVIDIA can, they're expected to release their earnings on Wednesday after the stock market closes on February 21st. The company's earnings release has a 51% expecting an earnings beat. Option traders are pricing in around an 8% price movement in either direction. So it's definitely a lot more than what it normally moves, when it normally moves around 5%. So we are expecting extra volatility from this semiconductor stock. There are a few other miscellaneous earnings that are scheduled for this week. Looking at Tuesday again, let's see, the Molson Coors, which they will be releasing their earnings Tuesday morning before the stock market opens. Looks like option traders are expecting around a 7% price movement in either direction. Let's see, any other big ones here? Big ones, I see. So Silvergate, that ticker symbol is SI. Option traders volume is elevated due to an increase in short interest. Option traders are expecting a price movement around 23% by the end of this week. So again, Silvergate, put that on our watch list. We got to make sure that we are taking advantage of every opportunity. Let's see, Coca-Cola, Coinbase, went over that. That one. Okay, going to Wednesday. It's going to mention the Fed meeting. Right here it says, so Wednesday, regarding the Fed meeting, it says holding positions and or opening any now positions during this time can be risky, because at 2 p.m. Eastern time, that's when the Fed meeting minutes will be released. So the Fed chair Jerome Powell is signaled that I can barely read it, but I do have it in our group, so you can always download it. So I can't read it. Impulse has started to emerge, sending the U.S. dollar tumbling. That's I think that says sold. The tone of the Fed officials since this meeting has been much more hawkish, with many stressing that rates might need to go higher than previously revisioned. So just like what we were talking about, which, with what we've been kind of going through last week, it's more likely that is bearish. So just be prepared for bearish characteristics. But once we have a big red day, that could easily recover, because the storm will then begin to calm down. The market needs to come down before it can come back up. So, if we know what's going to happen before it happens, we can take advantage of this. And that's what we do by doing our little weekend due diligence. And so, looks like on Wednesday, we also have Overstock, that is OSTK. So it's earnings before the market opens, where it looks like we're expecting around a 17% price movement in either direction. So that's a great opportunity. I'm going to put that on my watch list, because I'm definitely going to be straddling that one with that kind of volatility. That should be a pretty good one. Let me see. We got some other ones here. Let's see, any other eBays. It looks like it's about a 7% price movement. Here we go. Here is another one. Teladoc Health. Ticker is TDOC. Looks like we have earnings after the stock market closes on Wednesday. Looks like we are expecting a price movement around 16% in either direction. by the end of the week. So let's put that one on our watch list as well. Then we have IQ. IQ is expected to release their earnings after the stock market closes on Wednesday as well. Looks like we're expecting around a 15% price movement in either direction. Then we have Unity. Unity, they are they design a lot of games and whatnot, and 3D modelings but they are also expected to release their earnings after the stock market closes on Wednesday. But we're expecting another 17% price movement in either direction by the end of the week. And then Beidou, they're basically what the Google of in China, and so they are the search engine over there, and so we are expecting them to release their earnings after the stock market closes on Wednesday, and we are expecting an 8% price movement in either direction there. And so Wednesday, that's going to be a heck of a roller coaster, you guys. That is going to be prepared. Just make sure these are on your watch list. And then Thursday, we got the economic reports that we talked about. That's going to provide a lot of volatility on that as well. Despite the rise of the interest rates that we've seen over the past few months, the United States economy has held up reasonably well with strong growth in the third quarter as well as the fourth quarter. After a week, it says H1, the first, I can't read that. It's just too pixelated. Of the U.S. quarterly or the fourth quarter GDP saw that the economy expanded by the 2.9%, which was above exceptions of the 2.5%. Personal consumption was a little disappointing, slipping back to 2.1%, which wasn't that surprising given that November and December retail sales contracted. This trend will probably rebound in January, personal spending and income numbers. And so, again, be prepared. That's just going to provide a lot of volatility, no matter what happens with the release. Some other ones we haven't talked about. Let me see. Wayfair. Wayfair, the ticker is W. Looks like we have earnings before the market opens on Thursday. We are expecting a 15% price movement in either direction, so definitely put that one on our watch list. Let me see. Some good volatility. Farfetch is also expecting to release their earnings on Thursday, but after the stock market closes. Their ticker is FTCH. We are expecting around a 19% price movement in either direction. Now, Beyond Meats, they are also expected to release their earnings after the stock market closes on Thursday. Beyond Meats is BYND. We're expecting around a 24% price movement in either direction, and most likely probably the downwards direction, as they produce a lot of fake artificial meat. I would imagine with the slow growth of certain things, and because that's very expensive to buy, but with inflation on groceries, a lot of people have been cutting costs on certain things, and so. But to be determined would be a great one to straddle. That way you're covering both your upwards and downwards direction. Next one is Carvana. Carvana is also scheduled to release their earnings on Thursday after the stock market closes. Their ticker is CVNA. We are expecting around maybe around 30% price movement in either direction. I'm definitely going to be straddling that one with that kind of volatility. Now, with high interest rates, people aren't probably buying as many vehicles, Carvana, I would imagine, being in metropolitan areas. They probably have a lot of high mileage vehicles. Dealerships that are probably prospering a little bit better are probably new car franchise dealerships, because that is an advantage that they have that Carvana doesn't. And so with new car dealerships, they're getting new vehicles in all the time. They're getting fresh trades that Carvana is enabled to get, and so that allows they're losing a lot of they're leaving a lot of money on the table. And so plus I think they're ones that have been going through a lot of legal issues too. And so most likely Carvana is probably going to go downwards 30%. And so unless things have gone pretty well, for them, maybe it'll go up, but I doubt it. Next one, we already looked at Square Block, and then on Friday we just have more of the economic reports. So more volatility there, but also keep in mind that this is the week what is the 24th? I believe that's this Friday. February 24th is also the anniversary date of when Russia invaded Ukraine. And so there could be a big event going on. It's undetermined, everyone. And if it's undetermined, that means it's uncertainty or uncertain. And when we have uncertainty, that provides bearish characteristics with the market, because the market just doesn't know, and it rather be safe than sorry. So we may see some sell-offs going on with chain reaction to a lot of bearish news, as well as quantitative tightening. Because again, quantitative tightening is still so far about twice a week until we get into the summertime, which the summertime is the most bullish season of the year. And so it only makes sense where the government will start cooling down the quantitative tightening. That way we can start pumping up the market and get it really up there. And so again, that's just really, really important to know. And so that way we always know what's going to happen before it happens. And so Tuesday, it looks like the government is scheduled to sell about $3.3 billion worth of stocks. For this Thursday, they have a very large amount of $14.5 billion worth of stocks. You can see we don't usually get that high amounts. You can see just on the first page between now and May, there's not very many. We have another one that's like 15, almost 16 there in April. So but that's huge. So Thursday is that's going to be massive. But when it comes to the quantitative tightening, the government's a little tricky when it comes to that stuff. They could execute this order during pre-market, and we could see just a massive drop, or it could happen throughout the day, or after hours. It could be the last second during after hours, making it look like it hasn't even affected that current day. But it is going to be scheduled. It is going to be executed that day. But if it is scheduled, or if it is executed at the last second during after hours, that means it will affect the next trading day. But at least what it'll do is it'll absorb the impact, meaning where we're not going to see a massive drop because it's during after hours, which then bleeds over to pre-market. So it gives it time to soften the blow. And so with this large amount, I can easily see where the government can do that. So we might not see quantitative tightening affect the market on Thursday, because most likely they'll probably do this during after hours. That way the blow can be soft, because $14.5 billion worth of stock, that is a huge amount, just trimming the fat off the stock market just like that. So I feel that they're going to do that as softly as they can, as much as they can, by doing that during after hours. But Tuesday, $3.3 billion dollars, that can be at any time. I would imagine probably either during pre-market or during when the market's open. However, you'll notice that they never mention quantitative tightening because they'll usually blame it on the news. They'll wait and for the economic report to be released. They'll execute this, and then that way they can blame it on something else. That way, people just don't know about this kind of stuff. And so, but just know that the quantitative tightening is right here. It is a schedule that is available. Now, it's also important to know about the Joe Biden's and the White House's schedule because it has a massive amount of volatility with the market as well. Now, it was just announced today during President's Day that he's over in Ukraine visiting Zelensky. And so he's over there, so it wasn't on the schedule. But this schedule, which does update every day, every midnight Eastern time or 9 p.m. Pacific time. So that way we can always look at it and see what's scheduled to happen the next day. And so normally their events are scheduled during power hour. So where the economic reports are scheduled during the morning. And so we have these volatile times that covers these first hour and last hour basis. And so that's why it's extremely important to know. And then and a lot of stuff is live. And so when it's live and it has a schedule here, like there's a Friday press briefing, we can tune to YouTube, the website or the application, 15 minutes before the event starts, and you type in under YouTube White House Live or Joe Biden Live or President Live, and all of a sudden you'll see a lot of these news network with their live footage right before it begins. That way, I mean, you see a different a level of things when you're watching and listening it to live than you do watching it pre-recorded. Because when you're watching it live, not only do you get a lot of the body language and other things that the pre-recorded stuff that they take out that you never get to see, but it also affects the stock market instantly. We got to stop relying on news companies and pre-recorded stuff because the activity and everything has already happened. We got to know when these events are happening before it happens. That way we know what to expect. And a lot of times, if we already know what's going to happen before it happens, the market begins to price things in accordingly before that, and then it just reacts even more, afterwards. So it's just really, really critical that like I said, you bookmark a lot of this stuff. But and then going into last Friday's options activity, we can see that Tesla was very, very dominant at about 4.8 million in options volume. Apple was about 1.2 million. But we can see kind of a nice, almost a 50-50 call and put ratio. Going into the weekend, a 3-day weekend, investors just weren't exactly sure what Tuesday was going to be like. Is it going to be more bullish or is it going to be more bearish? But again, we can see 50-50, except for Apple's 59% calls and 41% puts. But that could be more or less the day trading activity throughout Friday. But with other areas here, like Amazon's at 58%, we have Google, which is at 70% calls, and then DraftKings, which is at 68% calls. So a lot of 50-50 ratios, but then we have a few other ones that are a little higher. But then let's take a look at the most active individual calls and puts. And then we can see here that are currently active throughout the weekend is we have a $200 put strike price for Tesla, and then we have a $210 call strike price for Tesla. Both with a very low amount of open interest with now a very high amount of volume. So you have some new interest on these ones. And then we have some more calls on Tesla, a $200 call strike price and a $220 call strike price. So we can see obviously that out of these top four that are currently active, that 75% of them are more bullish than bearish. Going into the weekend. And then Apple, we have a Apple call, $152.50 call strike price. That all expires this Friday the 24th. All with a very low amount of open interest and a lot of volume now. So it just looks like a lot of people are bullish going into Tuesday as they've prepared themselves with a lot of calls. Now, any other unusual activity that we're seeing here? Bed Bath & Beyond looks like it's continuing to drop. This one is now past its strike price, going downwards. We have the Mara, MARA. We have, which is currently at $7.70. We have a call strike price at $20 that expires later on this year on June 16th. It had very, very little open interest of about 6,400, and now we have a lot of volume. Now, if you're not familiar with options or know what open interest is, it's the total number of open contracts or option contracts that have been traded but not yet liquidated via offsetting trades. That means that people bought them previously and they've been holding. They have not yet sold them. But now we see a lot more volumes, which means we're seeing a lot more unusual buying activity. And even if you're not into stock options, that's fine, but this information can still provide you a lot of highly valuable information, as we always want to follow the money, always knowing where the money's going, where people are putting their money. Well, look at this. People are betting their money that this stock is going to go to $20 within this time frame between now and then. Even if you were to buy shares of it, and you held and it got to $20, that is almost a $200 or 200% gain. I don't know. They may pay dividends, probably not, but if they do, not only are you holding on to an appreciating asset, but they pay dividends. They could be paying you a little bit every 3 months. And so, but I believe we may have seen this stock somewhere. I cannot recall. Let me click here and see. I've looked everywhere and cannot find it. But anyways, let's go back here. And but yeah, so definitely this is going on our watch list for more of the short-term in investing. And so, and then there's another one right here. We have an Apple $165 call strike price that expires this May 19th, or in approximately 91 days. But it has and it may be accumulating more interest, but we can also take a look at some other options activity started out by the highest open interest. And right now, out of everything, AMC has been getting a lot of interest, but more of the bearish type of interest. And out of all of the top four, we have 3 puts and 1 call. And so, we could be seeing a little bit of straddling here. All of them have an expiration date for March 17th, which is approximately 28 days. But we do see even which right now AMC, which is right at $5.24 a share, but we do see a $10 call and a put, and a $3 and a $2 put. And so, but a majority of them are very, very bearish. And so, but we do see some other ones to kind of take a look at. If you're a short-term investor, this is one to kind of look at regularly as well, because what you want to look for is the share price and a call that's less than the strike price. And so like the ET, which is currently at $12.87 a call, we have a $15 strike price that expires next year in January. And so if you were to buy a share and if it got to $15 a call, that is, I mean, that's a good gain. You know, you're gaining what, like, 20% or something. And so same thing with the Ford Motor Company. Usually we see a lot of, we're seeing some weird strike prices with Ford right now. But Ford has a lot of potential because they're still building their own mega factories and stuff for their EV vehicles and batteries and whatnot. So we have a $14 call strike price that expires next year, and so Ford Motor Company right now is at $12.89. And so we do see a lot of puts too. So if you're holding shares, you see a lot of puts, then that's kind of a sign to say, hey, you might want to reconsider. But then we have this. I'm not familiar with what this is. WE is the ticker. Let's see exactly what it says here. WeWork Incorporated. It looks like it was down 8% last Friday. And so, however, this whole WeWork, which is currently at $1.55 a share, we have a $2 call strike price. So if it gets from $1.50 to $2, that's like a 30% gain just from holding a share. And it looks like it has an expiration date for about a month, next month of March 17th. So there's some growing interest on this. So we definitely need to put that on our watch list, see kind of what's going on there. Then we have there's another AMC call strike price, $15. A little bit of interest, a little bit of activity there. Some other ones. Let's see, any big gaps? Oh, look at this! My goodness, look at this, you guys. So Tesla right now, which is TSLA, which we have currently at $208 a share. We have an $825 strike price that expires next year, January 19th, which is approximately 336 days from now. We have an open interest, which is slowly accumulating at 75,000, but last Friday's volume activity was about 3,000. So, people are slowly betting that Tesla could easily reach that. Why do you think that Tesla can easily reach that? I mean, Tesla has reached phenomenal objectives and goals and reached some pretty amazing high valuable points. But what would make Tesla possibly get up to this point by next year? It could be a lot of different things. It could be, that he's, like I said, it could be a lot of things. But it could be that maybe when they release a new, when they do the artificial day, the artificial intelligence day, or the robot, maybe they have a new robot that they go over that's more enhanced, that looks better, operates better, but maybe they take reservations. Maybe they'll start putting $100 reservations on everyone, and that helps manipulate their share. They start pumping it up. Or what if, because just recently the government is saying they're trying to communicate with Elon Musk about partnering up, about being able to open up his charging stations up to other platforms. And so could that potentially benefit Tesla, or could Tesla sacrifice some of their growth and revenue if they do that? There just seems like there's a lot of things in the pipeline for the company, but this is very, very unusual. That's a very large gap to go from $208 to $800. So definitely very unusual. Got to put that on our unusual list. But also, right below that is a $300 call strike price that expires much sooner, approximately, well, in fact, next month of March 17th. So that means to go from 200 to 300, that is almost a 50% gain going from that to that in a very short period of time. Tesla wasn't that long ago. It was $300 not that long ago. So I mean, it can easily get back there. But yeah. So you guys, this is very important to know this stuff. If you have any questions, just let me know.